Hey guys, my name's Tiffany. If we haven't met, I'm with the local element and we're going to go over your tax assessment and why it's important that you know these numbers and how in the world to read it and some exemptions at the end that might apply to you. So, first thing, you'll get this in the mail. It'll say right at the top, this is not a tax bill. You'll have your assessor's information up in the corner, your parcel number, basically how the treasurer keeps track of the property and the property address. And then if you live in the property that you're paying taxes on, your information will be here and it'll be the same. Next section is exemptions that exist. So if you live in your property, you should see this saying 100%. If it doesn't say 100%, definitely call the assessor as soon as possible to get that tax exemption. It can reduce your taxes by about 39.5%. And then some other exemptions that are not as common, but if they apply to you, you would know that they apply to you. So make sure that they're indicated there. Legal description is the way that the property is described at the assessor's office and the register of deeds. And then this is really where we wanted to hang out. So we've got 2023 information, 2024 information, and how it changed. This is where the confusion comes in. And so we're going to talk about it. And if you still have questions, feel free to contact your real estate agent. They are so happy to help. So the way that the state of Michigan does property taxes is that when you purchase your property, the state caps that taxable amount and they can only increase it little by little every year after that. And so if you purchased your home in 1994, they capped that tax and they've only increased it a little bit every year. If you purchased your home last year, that tax cap came off and they will reassess it usually to the assessed value or the purchase price that you purchased it at. And so you'll see an increase in taxes because that cap came off the way that the state of Michigan does taxes. And so for this homeowner, you'll see there's a big difference between taxable value and assessed value because they purchased their home so long ago. So it's been capped. Now, the state says you can only increase taxes in that capped status by 5% or the rate of inflation, whichever is less. So we know that the rate of inflation is more than 5% right now. And so we'll come down here and it'll tell us exactly how much they've increased the taxes. 1.05. That means they've increased it by 5%. They're doing 100% of the taxes from the previous year plus 5% increase for your taxable value. So now you might be saying, those numbers are really low. You're right. Another thing that's confusing about the state of Michigan is that they take these numbers and multiply it by 2 to tell you the true numbers. I don't know why they do it that way. It's in legislation to have it halved like that, but what they're telling you is that they're taxing this property at double this number, so 230. We'll go over to 2024 in a second. So 230, but really if this house sold on the open market last year, they would expect it to sell around 400,000, but because of that capped status, they're being capped at and taxed at a property with a value of 230. So then we'll come over to what's the increase look like? Well, in 2024, this taxpayer would expect to be taxed at this 120 number, so 240 value of a property. But really, the assessor believes this home is worth 442 and some change if it's sold on the open market. So we're going to stop here and say this is a reason to appeal that number at the board of review if you don't agree that your house would sell for whatever that number is times 2. Because what will happen is if you sell this house and it goes to the next owner, they've already got the assessed amount that they're going to increase those taxes to. So if this homeowner didn't believe 442 was an appropriate number for their house, they should approach the assessor about having that assessment brought down. They could work with their real estate agent to provide comps. They could do, I'm so sorry, broker price opinion. My mind was on to the next subject already, but I needed to finish this one. Broker price opinion to give you the paperwork to approach them at board of review. And so you're thinking, how do I do that? You just call them right here or you email, and these are the dates for the board of review for your, you would call them and you would approach them. You could bring your real estate agent. You could do it yourself, whatever you feel. So this right here, if you don't agree with these numbers times 2, that's a reason to approach your board of review for a reassessment. I have done it twice. I've been successful only once, but it's not as intimidating as it feels. So yeah, you could do this every single year. You could be appealing your thing every single year. Power to you. Again, I've had a 50% chance of it actually doing. And then down here is the reason for the change market adjustment. They believe the market has appreciated. So we've got the change from the previous year. And again, we're going to multiplied those by 2 for real numbers. And then they've so kindly right here told us what that'll be an increase on taxes on. So what I will know is I'll take that number, divide by 12 if I'm the homeowner, and then say, okay, that's what is the change for my mortgage payment. $20 a month is going to be the change for the mortgage payment. Great. But that still doesn't tell you the total taxes, right? So what we do, and I'm not going to get off of this screen for fear that it'll stop recording this video. So I've just taken some screenshots of the process. How do you calculate your 2024 taxes? The first thing that I do is just Google, it'll take you to the first result, State of Michigan Property Tax Estimator. So this is the result that will come up first, Property Tax Estimator. Make sure it says State of Michigan up there. Then it'll take you to a page that looks like this. You're going to click that button right there. And then you're going to go to the Property Tax Estimator where you'll put in your county, your village, the school district that your house is in, and then press search. And so now when this homeowner is preparing for their new mortgage payment, they will have Kent County, Granville Public Schools, and then the millage rate for the homestead and non-homestead. What that basically means is what is the tax rate if you live in the property? So again, make sure if you live in that property, it says 100% exemption, or if this is an investment property, a second property, a cottage, an industrial property, those are the difference in taxes. You'll put in that information. So 4806 will be the annual estimated taxes for the city of Granville for this homeowner. If they did not live in this property, it would be 6863. So this is how you can have a heads up for what's happening for your mortgage. It will not change your mortgage right away. Your mortgage company does one annual review of your taxes a year. So it might not be till October, but you can start making these adjustments in the way that you're spending ahead of time to anticipate it. If you do not agree with these numbers, if these numbers are a shock to you, talk to your real estate agent immediately so that you can get prepared for the border review. The worst thing that can happen is that you're not prepared for this increase in your mortgage. They adjust it, and then you've got to go backwards to cover the difference for these taxes, as well as project forward for what the difference in your taxes will be moving forward. And then you'll have basically, you're doing 2 different months of savings with your mortgage account for the increase in taxes. So again, if you don't agree with this, if you don't agree with your assessed amount, talk to your real estate agent or a real estate agent, anybody really, but your real estate agent can help about approaching the border review for your taxes. There are 2 exemptions that I want to talk about that are not widely known to the public, in addition to the principal residence exemption. The first exemption is the disabled veterans exemption. So if you or someone in your life is a disabled veteran, they were honorably discharged with a DD 214, and they're a veteran or the surviving spouse of a veteran, they can apply for a property tax exemption. I have seen 100% disabled veterans get 100% of the taxes exempt. I don't know why it is not more widely known in the veteran community. I don't know that I said that correctly. I don't think that the information is getting to the veterans. So if you know somebody in your life that is a disabled veteran, please make sure they know this information. I have been just so overwhelmingly surprised when I'm in conversations with disabled veterans that they don't know this exemption exists. So make sure that they know, people in your life know that this exemption exists. Number 1, they can go to the assessor. They need to bring their DD 214, their driver's license, marriage certificate if it's a surviving spouse. Take it. It's one application now. I've been told in other counties it might be based on the percentage of disability. So if anyone in your life has a disabled veteran status in any percent, make sure they're talking to their assessor this year because they just changed the legislation on it. I haven't read all the way through what the new percentages are or if it's only for 100, but make sure they're talking to their assessor, please. The second exemption that exists is a poverty property tax exemption. If you or someone in your life has fallen on hard times, they are having a financial crisis, they can approach the assessor about a property tax exemption for that poverty status. It's for low-income homeowners. You will need your driver's license, a copy of your deed. If you don't have a copy of your deed, again, approach your real estate agent. They can help you, or go down to your county's Register of Deeds building, give them your address. They can give you a certified copy of your deed. It's like $1, $2, something like that for them to print it off. And then you'll need to bring your income documents or lack of income documents, something that's showing the amount that you're receiving each month, either through payments through the government, through income, through disability, whatever it is, just take it in there for them to review, because that is a way to lower your property taxes and mortgage payment during this financial crisis time. So those are two exemptions that I don't think are talked about enough. So I want to make sure that you guys knew about them. If you have any questions about your assessment, if you have any trouble with your border review, if you want help preparing for your border review, if you want more information about these tax exemptions, let us know. Let your agent know. Let any agent know. They are so happy to help.